So Bitcoin has found some stability at 48,500, and everyone is kind of expecting Bitcoin to make a move again now. People seem to have short memories and to remember how long it took for Bitcoin to recover after the May unleveraging. And so today what we're going to be looking at is we're going to be looking at how long this cycle may last before Bitcoin once again resumes in this bull market pattern. Because everyone's phoning us and getting hold of us and asking, when do we think Bitcoin is going to start moving up again? We've just had a massive unleveraging, and it seems that people have short memories. So that is what today is all about. Today, we're going to be looking at unleveragings. We're going to be looking at how long we can expect this to last, and whether we're actually structurally still in a bull market. So it's going to be a big show, and then we're going to be doing a whole lot of giveaways. And yeah, it's going to be a massive show. Let's get this show on the road.
He's all about the Degen, baby. Crypto man. He's all about the Degen, baby. Uncle Ren's in charge. He's a crypto star. So savvy what he say. Fast money like a sports car. He's all about the Degen life. Make some money, change your wife. Big calls on the old coins for the bull market hype. He's all about the Degen, baby. Crypto man. 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 Crypto man ran. Crypto banter. You got crypto questions, they got crypto answers. Jean-Claude Van Damme of the Banter fam. Could he kick it? Yes he can. Can he kick it? Yes he can. Crypto man ran.
Welcome back, guys. I'm Crypto Man Ryan, and I'm here in the bull market and in the bear market. And today we're going to be doing 3 shows, guys. We had Sheldon's show in the morning. We got this show today, driving up the fundamentals. And then later on, we've got another edition of In the Game, and that's with Hustle, talking all about metaverse assets, gaming assets, and there are so many opportunities there today. If you're new to our channel, well, this is a great time to join us because it's like joining us 3 months ago and having a whole new bunch of calls that we can be buying, because that's really all that's happened here is we've just reversed the clock slightly. We've taken out all the leverage, and now we're ready for another fresh start in what I think is a real raging bull market that hasn't broken. There's nothing to show us that the bull market structure has been broken. That's what we're going to be talking about today. So if you are new to the channel, well, subscribe. You have nothing to lose by subscribing. You have everything to gain. You can win the Banter Bags. And the Banter Bags are growing every single day. Every single day we put new money into the Banter Bags. Last week, I think the Banter Bags were at like $400,000, and they're going to keep growing until we get to 700,000 subscribers. And when we get to 700,000 subscribers, we give the bags to our community. We're also going to be doing a whole lot of giveaways. Let's see the Twitch people go. Giveaways, guys. We're going to be giving away PathDAO, which is a gaming guild DAO, a Southeast Asian focused gaming guild DAO, which we are supporting. And they are currently having the IDO on Copper, and we're going to be giving away a whole lot of PathDAO tokens. We're going to be giving away 10,000 PathDAO tokens. And then you remember, in fact, let's talk about Star Launch for a second. So even though the Monkey IDO was in possibly the worst days of the market, it sold out in 10 seconds flat. And so now we're just waiting for our MonkeyBall tokens before we can start trading them. And hopefully the MonkeyBall guys will actually stall them for a little bit, because what's the upside of doing a TGE into a bad market? There's no upside. So if I were them, I would stall. I did tweet. I hope they saw my tweet. They should stall. They should definitely stall their launch. In fact, all big projects, all good projects are stalling their launch. Remember I told you that there was a mystery IDO on Star Launch, and I knew what the mystery IDO was, and it's happening, I think, on the 12th of the 12th. Okay, so I can tell you what it is now. It's like almost public knowledge. I think it's public knowledge, but a lot of people now know. The mystery IDO is Prism. And what Prism is, it's a DEX aggregator. It's like a 1inch, but it's on Solana. But not only that, because it is Prism, which is built on top of Symmetry. Now, Symmetry is an indexing protocol, an index tracking protocol, indexing protocol on Solana. Prism finds best prices for your trades across all the AMMs on Solana, stable pools on Saber, order books on Serum, and index pools on Symmetry. So eventually what I think is going to happen is this is going to become the one place where everybody trades on Solana like people do today on 1inch. I mean, if you are trading on Ethereum and you're not using 1inch, which is it is a show sponsor of ours, but if you're not using 1inch, then you're not getting good execution, but B, you're also throwing away huge money in gas fees. Yeah, and speaking of gas fees, did you guys see the gas fees this weekend? Always happens. It always happens. It always happens that the gas fees, when people want to be buying or people want to be selling, specifically when everybody wants to be selling, the gas fees become so high. But except this weekend, the gas fees actually became a feature, not a bug, because the gas fee stopped everyone from selling, and that made the ETH BTC chart look like a superhero chart. The Sheldon chart looked like a superhero chart because no one could sell Ethereum because it was just too expensive to sell Ethereum. And who was selling? Well, it was the retail investors that were selling, and the retail investors generally can't afford the high gas fees. So what happened was, we know that the retail investors were selling. We know because there was absolutely no volume in this decline. It happened on the weekend. Obviously, it happened on the weekend. Easier. Happened on the weekend. There was zero volume, and we'll look at the on-chain metrics today, and you'll see that the people that were selling were retail investors. And if you were selling, shame on you, because then you're acting just like a retail investor, and you shouldn't be acting just like a retail investor. I see people are trying to get hold of me on my email, even though I've told them that I do a show at this time. Let's quickly just switch that off so it doesn't disturb us again during the show. Okay, no one's going to get hold of us anymore. Okay, let's look at this correction. It was a brutal correction. I'm not going to lie to you. It was a brutal correction. But I love those kind of corrections because, if you can watch these kind of corrections and you can be buying somewhere around here, you're almost guaranteed to make some money on the bounce. And then you got to also take a look at your long-term conviction and decide whether these are good buys or not good buys. So it was a brutal correction, but it wasn't the most brutal correction that we've had all year. In fact, let's assess the sell-off, and that's exactly what Glassnose did. Bitcoin holders realized the third largest on-chain capitulation in the history of the weekend, with $2.18 billion in liquidations or realized losses. But May was actually bigger than that, and June was also actually bigger than that. So it was a brutal correction, but we have short memories. How many months ago was it? Like 6 months ago? 6 months ago, we had actually a crash that was way bigger than this. And way more brutal than this. And in fact, if you look at the correction from 6 months ago, let's quickly go here to the deleveraging. Look how much leverage was flashed out in the May correction versus how much leverage was flashed out in this correction. So yes, it was a brutal correction. It wasn't a pleasant correction, but it wasn't as brutal as it could have been. And if you look at what happened in this correction, well, it does feel like, again, the short-term holders were the ones who were selling, and the long-term holders, well, they just carried on buying. They just carried on buying, all the short-term holders. Here is a Bitcoin total supply held by long-term holders on the weekend. You can see that remained pretty much unchanged. So no panic from the long-term holders. No panic from the long-term holders. The short-term holders is the spent output ratio, which basically shows the short-term holders, the short-term holders selling. Well, the short-term holders were again selling over here, and you can see there were a couple of other charts that I wanted to show you. Maybe we can find them over here. Here we go. Let's look at this. Let's start with the best question we could ask and see when the price is going down. Who is selling? Are the big money dumping, or is retail panicking? And the answer is big guys are sitting tight. This chart is showing that the long-term holders spent output ratio remains low. And you can see in the past when they sold, when the long-term holders sold, the spent output ratio continues to increase. So who's selling? Well, here again, the long-term hodlers, guys, are selling. The bigger the blue, the higher the profit taking from long-term holders. Comparing the three biggest crashes, you can see that we're nowhere near the top of the cycle where the long-term holders actually take their profits. So who's selling? Well, it's the short-term holders that are selling. What did it do? Well, it took down the leverage. This correction took down the leverage. We had the leverage dropping by 24.5%. As I said to you guys, I'm still not convinced that all the leverage has been flashed out. I think this is one flash out, and I think that we're going to have another leg, which is going to bring us down to somewhere over here, which is a great reset of all the leverage. And I kept saying last week and the week before that I think that there's too much leverage in the market and the market is going to flash it all out. But I convinced myself that the crypto quant wasn't updating, and that is based on the fact that it wasn't even moving. So I convinced myself that the crypto quant data was wrong, but the crypto quant data was actually right. 2.2 billion liquidations in 12 hours, 450,000 investors were liquidated, $2.5 billion in liquidations. And what we saw something incredible happen, which hasn't happened for a while, and that is that the funding rates went negative again. So the funding rate is pretty negative. Open interest cooled off. This is not about immediate price prediction, but Bitcoin has become ripe for a spark, sending it back to new all-time highs. So what we had was we just had a reset. And when these resets happen, it's so easy to get caught in the sentiment of what's going on around you. And if you look at the sentiment of what's going on around us, I mean, we are at extreme fear. And when you are at periods of extreme fear, it's very easy to start questioning your thesis. And you should be questioning your thesis. Because remember that when you have a thesis, you have a long-term thesis, but it is given all the market circumstances that are happening around you right now. And when market circumstances change, then you have to, again, reevaluate your thesis. Because we had a thesis, we thought something was going to happen, but we didn't then at the time know that Evergrande was going to potentially default. We didn't know that. Nobody knew that. We didn't know that the Fed was going to taper much earlier than initially anticipated, and that they were going to bring back slowing down the economy or stopping injecting money in the economy and potentially raising interest rates as soon as March or April. We didn't know that. But I think the Fed saw an opportunity. When they saw the Omicron virus coming, they said, hold on, we need to curb inflation. And how do we curb inflation? Well, what do? We have to slow down the markets. How do we slow down the markets? Well, we just tell them that we're going to be slowing down the markets. And then the markets slow down naturally because they think that the Fed is going to start slowing down the markets. And that makes less profits on the stock market in circulation and therefore less inflation. The thing is, though, when these things happen, people have short memories. They just forget. They forget that this is part of a bull market. Every bull market has these savage pullbacks. And this is coming from PlanB. And by the way, thanks to you guys, PlanB unblocked me. So congratulate yourselves. PlanB now allowing me to follow him again so we can actually look at the stuff on the show. But these pullbacks are healthy pullbacks in a bull market. This was 2017. There were 6 pullbacks in 2017 that were around 30%. But we forget that. And we start thinking now that this is the end of the world. It's not the end of the world. Look at every single time. TechDev sees it, he says, number of more or less 40% corrections. In 2013, there were 4. In 2017, there were 7. In 2021, there's only been 6. And we are expecting a longer cycle in 2021. So, I mean, it's normal. These are normal parts of a market which continues to run ahead of itself. Because crypto runs so fast, it gets leveraged really quickly. And every now and then, we have to just keep flashing out the leverage. And every time we do, the market goes down 30, 40, 50%. It happens every single time. Charlie Bielo posted this, and he says, Bitcoin fell 39% from its November high to yesterday's low. Its third correction of bigger than 30% this year. But then, what he also points out is how long does it actually take Bitcoin to recover from these corrections? These corrections are not quick things to recover from. We have just had a massive leverage shakeout. We have liquidated 450,000 traders at least. In fact, we liquidated another 100,000 traders the week before. So we've liquidated 500 or 600 or 700,000 traders in the span of 3 weeks. It takes a while for the market cycle to reset itself and for the money to come back in the market. You can't expect to liquidate people today and then for them to come back and go, okay, dusted myself off, ready to take liquidation, ready to take leverage again and to start pushing the market up again. That's not going to happen. And that's why every single time that this happens, there's a long time until the days to the new high. Now you can see on the April to June, there were 120 days to the new high. You can see that in 2017, there were 3 years. There were 1,079 days to the new high. It takes time. Once you have flushed out the leverage, it takes time to get people back into the market again. And that is what at Chessbrook says. He says, look what happens after those liquidations cascades. Look what happened in May. Look what happened in September. These wicks get filled. But this shit takes time to repair. We're not just going to get Bitcoin jumping to yesterday's highs again. There's no reason for that to happen. We have just liquidated 700,000 investors. We have just flushed out the leverage. And again, I say, I don't think that this is the entire flush out of the leverage. I think there's going to be another leg down and we're going to flush out the leverage to normal levels. And then we can continue in this bull market cycle. But you can't continue in a bull market cycle that is completely over leveraged for a long period of time. We've seen that every single time, and every single time we think it's going to be different, and it wasn't going to be, and it wasn't different. What we do know, though, is that every single time after we get these periods of extreme fear, the market tends to explode. Okay, so usually when we fall below 20, the market enters a passive cycle for a week, and then after that, the market usually tends to explode. And right now, we are at the lowest that the fear and greed index has been in a hell of a long time. In fact, I think the last time I saw it this low was somewhere around May. And that's really where we are. So it does look like we're at the beginning of a new cycle. We've got the leverage being reset. We've got the fear and greed resetting itself. And we're entering a new market cycle now, which is hopefully going to be a little bit more healthy and maybe even a little bit longer. The main thing that we have to do now is we have to question our thesis, because now information has changed. And because information has changed, and we know that the Fed is going to start tapering, and we know that Evergrande is going to start defaulting, we need to look at this correction, and we need to question all the assumptions that we had before this correction. And if nothing has changed, then we just keep on keeping on with our current thesis in place. Now remember, we said it's going to be lunar month, we said there's going to be ETH layer 2 scaling, we said gaming was going to continue to explode, but now we have to challenge all those assumptions. We have to challenge those assumptions against data. Whatever data we have, we've got to ask a very important, pertinent question. Is this the end of the bull market? Is there anything that could tell us right now that we're in a bear market? When we have to ask those questions pretty seriously, because we don't want to be following the narrative blind. And I think that that's what happened earlier on this year, or in the last couple of months. We all followed this narrative blindly that Bitcoin was going to hit 100,000 and then 135,000, and possibly because PlanB set that narrative, and PlanB has 1.6 million followers on Twitter. And he set this narrative about the $100,000 Bitcoin. And so we followed this narrative. And in November, we saw a few cracks in the narrative. And then we got to December and realized there's no way that Bitcoin's getting to 135,000 at the end of December. So we have to now question all our narratives. We have to question all our assumptions and see whether our thesis is still intact. And so to do that, I kind of asked myself one question. Is there anything that shows today that we're in a bear market? Has anything on-chain, off-chain showed me that we're in a bear market? Because we've got to ask these tough questions. And if we are in a bear market, then we've got to accept the fact that we're in a bear market quickly, and we have to trade accordingly. And that is why we have to ask all the questions. So when we ask these questions, the first thing that we've got to do is we've got to look at the charts. And we've got to see if the charts are giving us any clues that we are now going into a bear market. Even with this huge wick, is there anything that shows us that we're going into a bear market? And what am I going to look for? I'm going to look for whether Bitcoin went through the 200-day moving average. I'm going to look for volume in the market. I'm going to look for Bitcoin dominance. I'm going to look for higher highs and higher lows. In fact, I'm not going to look for anything. I'm just going to bring in Tentino, and he's going to walk us through.
Yo.
Yo.
What's up, brother?
Okay, so is there anything that has happened on-chain to show us that we're now going into a bear market? I think let's look at the list. Have we broken the main trend?
No. We have not broke the weekly trend. This is the main weekly, very, very high time frame trend. We have not broken
Not broken
that.
yet.
No lower
Okay.
low either.
Next thing, has there been a lower low?
No. No lower
No.
low.
Just show us on the chart where the higher low is.
So for us to make a lower low, we've got to break under 40. So we're broken at 42. So 40 is the break even point.
Okay. So we have a higher low. We don't have. We have a higher low. We haven't broken the trend. Let's talk about the 200-day moving average. Have we broken the 200-day moving average on the close?
No. We're currently right above it right now. It's sitting around 46,000. We have not closed below that.
Amazing. Now let's look at something else. Where is the volume?
Yeah, this is where it gets very interesting now because, the last cycle that we had, we could clearly see where the big guys were getting out. And that was in these big volume bars over here, these sell-off bars. And you could see every time we're getting somewhere, big volume bar sell-off. Same like in this region over here, big volume bar sell-off. And then there was big volume bars bleeding up there. And then we obviously had the big drop. Where this time, guys, look at this volume. There hasn't been, usually it takes time for big guys to sell off out of the market, and they do it in 4 different sort of stages as they did over here. Here, we had no increase in actual volume. And what I believe is, and what I see over here, that this was a retail drop. This wasn't a big institutional drop. The institutions the big guys did not have enough time to offload. It takes time for them to offload. And you can see here very clearly, we never got anywhere near to the previous volumes that we got during May, during April, at those sort of times. So for me, whales need to slowly get out, then they can dump the actual market. I don't feel that they had time here. I felt that it was an over-exaggeration from retail investors, and they were the ones that fully pulled this down very quickly. And I still feel that the big institutions are still in the market. I don't feel they've exited the market.
So again, let's just quickly, I'm going to go through this quite methodically because you know me, I like to be pragmatic and methodical in my approach. From a technical point of view, there is not a single indicator that you can see that points to us being in a bear market.
Yeah.
No volume, we've kept a higher low, we haven't gone through the 200-day moving average, and we have stayed inside of the wedge.
Yeah.
All right, I'm going to bring you back in a sec. I want to just quickly look at the on-chain metrics, and then I'm going to bring you back. Okay, so that's that. The technicals are showing us no sign at all that we're going into any kind of bear market. Now let's look at the on-chain metrics. So what happened on the on-chain metrics? Well, okay, we flushed out the leverage. Tick. Great. Healthier on-chain activity. Now the leverage looks like this. It's still not as healthy as I would like it, and maybe we will therefore get another leg down. However, it is way healthier. Okay, then. Who were the buyers here? Let me just shut all these windows so we can actually look at the buyers. Here we go. Okay, so shrimps have started to buy. New people are buying. New small hands are buying. New small hands don't buy at the peak of the cycle. Okay, they don't buy the dips at the peak of the cycle. The number of addresses holding 100 plus Bitcoin, which is, call it dolphins, small whales, whatever you want to call it, just reached a 1-month high. So they were buying. So who was buying? On-chain, we see that the whales, or the smaller whales, have been buying. The big whales, which is the number of addresses with 10,000 plus Bitcoin, okay, buying, net buying. Net, they've been buying. Yes, there was a slight drop this weekend, but net, these guys have actually been buying. Let's have a look here. Let's see. I think we had a whole lot of other stuff that showed. So all of this shows that the big accounts have been buying, whilst the small accounts were the ones that were actually selling to the big guys. Again, looking at the on-chain data, we now have leverage down, we have smaller accounts buying, and we have bigger accounts, 100 plus Bitcoin, growing. That's not a broken bull market on-chain. So now we don't have a broken bull market off-chain on the technicals, and we don't have a broken bull market on-chain. Nothing on-chain right now suggests that the bull market is broken. Okay, next. Let's look at what has changed. or what we've noticed, or what came out of this bull market. And there are a few things that came out of this bull market. But before that, actually, let's just check on the US stock market quickly. Let's see what the US stock market's doing. I was hoping to get it before the show started. Okay, so the Dow, let's look at the Dow quickly. Sheldina, how's the Dow looking?
Looking good, bud. So we've got a nice strong bounce right off support at this point right now. And getting the Dow in the region of 35,400, breaking that, it will be breaking that short-term downwards trend that we have been in for the last 2 weeks. So we bounced on support. Yeah, and this looks like a good green volume candle forming here.
Okay, so you have the stock markets, you got a big green candle in the stock markets, up 455 points. They are calm. Remember, what set this off was stock market jitters. It was the Fed tapering jitters. It was Evergrande jitters. But the stock market is calm. So we have another factor on our side saying, this is not it. If the stock market hasn't gone into a bear market, then this is not the end of the crypto bull market. Why would the crypto bull market end so soon when the stock market continues to run? And we have got calm on the stock markets again. The stock markets look, I don't know, that green candle looks pretty chillax to me. Doesn't look like, I mean, it's a big, no panic on the stock market, certainly not. Stock market now off the lows. If you look at where the lows were, the lows, it's about 3% off the lows. And it looks like there is a calm restored on the stock markets. But what we have realized after this correction is that this time may be slightly different from 2017. And it's probably good, because if you look at what happened, the differences between this and 2017, I think when you look at it net, you'll realize that what happened this weekend was just a healthy flush out of leveraged in an over-leveraged market. It was triggered by the stock market, but everything is good on the stock market. And now we're ready to go up. And it will take a while. We're not going to go up tomorrow or the next day or the next day, because we flushed out all the retail investors and we need to get them back. Okay, we need to get them back. That might take a few months. But let's look at what we are seeing different from the 2017 bull market. And let's look at how this time it is actually different and how we're entering a new market cycle. And the first thing that we should look at is we should look at this chart over here, because we've spoken about this chart quite a lot. And this shows the lengthening cycles after each halving. Remember, we spoke about how the cycles get longer after each halving. And you can see that that's halving number 1, and that's halving number 2, and that's halving number 3, and this here is halving number 4. And what we're realizing is that we're in for a much longer cycle. It was predicted by people like PlanB and anyone that's looking at stock to flow models after the halving, but we're now seeing it actually playing out in front of our eyes. You'll remember that this bull market was predicted or was following exactly the 2017 bull market, where we had this like peak in December of 2017. But now what we're seeing is that maybe we're not going to have that peak, and that peak's actually going to be delayed for a couple of months, and we may get an extended bull market for at least another, well, if you look at this, I mean, you could see the top somewhere around here, which would mean even another year. It could give us another year of a bull market if Bitcoin follows this cycle over here. Then you got Will Clemente, and he says, I've talked about this for a while, but really really think there's a good chance for that 4-year cycles are over. Why? The type of market participants we now have could very well see rounded tops and bottoms from now on. Invalidation would be having a blow off top. So this thesis that we're not going to get a blow off top like 2017, and that we're going to follow a much longer bull market. And that is something that we're seeing playing out right in front of our eyes, that we may be getting this much longer bull market. Okay, the other thing we saw this correction that is very, very different from all the other corrections is, for us degens, possibly the most important metric. And that metric is this chart right over here. Because usually in times of panic, people run into Bitcoin. This time, in times of panic, people ran into altcoins. Yes. People ran into altcoins. Let me bring Sheldino back here. Sheldino, take us through the history of dominance every time every time that we have a correction.
So this is the interesting part. So I'm just going to compare, because I think the big thing that we've been looking at this bull cycle, same as 2017 bull cycle. And what happened was, and reason why we're saying that is there was a middle of the year dip off in the markets. And as you can see what happened during that time over there, massive spike in dominance. So dominance, Bitcoin was worrying the market. Everyone went back into Bitcoin and we had this big spike. We then had the big sell off in December of the dominance, and the real alt market or the alt cycle actually happened and everything skyrocketed. And then it all hit a top, blow off top. And then we had a big shift back into dominance again as soon as the whole market dumped and collapsed on this thing. Now, we were following the same thing throughout this year where we had the first leg very strong down. Alts jumped out of the gates very quick. We then had the May correction. And with the May correction, it followed the same pattern. We had a bounce in the dominance, everyone now going back into Bitcoin. Now, this is where we're saying, and I believe that we have decoupled from all the previous cycles where we had a big dip off in the market. And for the first time, we've had a dominance collapse during that time. We've never had it before, right? Not when we've had such a big drop off in the market.
If people were panicking, they would rush into Bitcoin. But they're not panicking. They're just keeping their money in altcoins. They are keeping their money in altcoins. Now, I'm going to put you back in the waiting room and we'll get back to you in a few seconds. But if you look here, Tushar Jain said, Bitcoin is underperforming Solana, Ethereum, and several other major cryptos in this drawdown. It's worth exploring the Bitcoin decoupling thesis for an explanation why. Remember, the majority of capital in the world wants to be invested in productive assets. And he refers back to a tweet storm from May this year where it says, crypto markets are going through a major transformation right now. Historically, most crypto spot assets were traded primarily in Bitcoin terms, and most crypto derivatives were collateralized in Bitcoin. This is changing. We call this the Bitcoin decoupling. There are a few big reasons. One is there are many more stablecoins. Two is institutions are looking way past Bitcoin to other cryptos. And he goes through this whole tweet storm, but what he comes out with is he says people are looking for productive assets. And ETH is a productive asset because it's an asset that creates smart contracts and whatever else. And Bitcoin is just a store of value asset. And so people right now in this dip were going into altcoins instead of going into Bitcoin. And you could see that this ETH BTC chart actually printed a new high while all this panic was happening. So instead of running into Bitcoin, people stayed in ETH. Okay, now some people stayed in ETH because of the high gas fees. And as I said to you, the high gas fees, who would have thought, but the high gas fees actually became a feature, not a bug. So high gas fees stopped people from trading out of their ETH when the market was panicking. I tried to do some transactions. The gas fees were about $800. Okay, at $800, for most people, unless you're doing huge transactions, you are locked into ETH. And that is what took this ETH BTC pair to a high in the middle of the sell-off. But I think it's also about this narrative that we've been talking about. Remember, we've had two narratives that are going on now. We said this is ETH BTC season. We said the institutions are coming in. The institutions are starting to look at ETH. We saw this, here we go, UBS, one of the biggest banks in Switzerland, with a report saying it's all about the ETH. And you could see that that everyone's talking about this ETH BTC chart. And you know what, if it's not ETH BTC that is flippening Bitcoin, the real flippening is actually ETH plus Cardano plus all the ETH layer 2s. And that is starting to flip in Bitcoin as people move from a non-productive asset, which is Bitcoin, to a productive asset in crypto, which is Ethereum and all the smart contract blockchains. And that's a massive narrative that we've been talking about. And that narrative is playing out right in front of our very eyes. ETH BTC chart. Let's have a look at the ETH BTC chart. I'll quickly call it up first over here. ETH BTC. Okay, now what you can see is that this green candle up happened when the sell-off happened, and we're currently, there's a higher high there, and there's a higher high there, and we're now tracking in this channel that is going to take this ETH BTC chart way, way, way higher. So the trend here is that the ETH BTC chart is going to be going much higher. And everyone is now on board. The flippening has already happened. It just spread out over ETH plus ETH killers versus Bitcoin versus ETH versus BTC. You've got Nicholas Merton, Data Dash, who says the flippening, also known as the moment where ETH flips Bitcoin in market value, may very well happen in this bull market. Below is the Bitcoin dominance divided by the ETH dominance chart. And he shows what happens when you divide them. Now, when that gets to bigger than 1, then ETH effectively flippens Bitcoin. And he's showing that there's a cup and handle forming here, and eventually it could lead to ETH flippening Bitcoin. But remember that the real flippening is all of the layer 1s and layer 2s that are happening. And again, we saw that narrative playing out in front of our very eyes. ETH 3.0, which is the ZK rollups market, is growing, and that's why MATIC, let's look at MATIC. MATIC also performed brilliantly in this little pullback. So let's quickly just go to Binance. Okay, now you can see that it did dip like everything else, but it started to recover. Now as the market comes down, it's coming down again. And that's in anticipation of the conference that they're having on the 9th of December. So that's also happening. So we had the dominance holding. We have this thesis for a much longer cycle playing out in front of our eyes. We had this shift into altcoins and into ETH-type altcoins. And then we had, for me, the most exciting part of the entire correction. You know, I was watching the correction go down, and I was supposed to be sad about it, but something else was happening while this correction was going on, and I just sat there and I thought, I cannot believe that this is what's happening. I was blown away. What that was that if you think about 2017 and you think about how the market capitulated in 2017, there is no way in hell that when the market capitulated and when people were panicking, that people would go into an algorithmic stablecoin versus going into a US dollar backed stablecoin. How could you even fathom that investors were going to put money or to keep the peg for an algorithmic based stablecoin that is based on nothing more but than an algorithm to the US dollar? And for me, that was the biggest takeout of this panic. The algorithmic stablecoins maintained their peg. I got to show you this. Okay. This is what happened. The algorithmic stablecoin kept its peg. This one was supposed to dip by 30% if people were panicking. People were supposed to lift their hands up and say, whoa, 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 this is a fun game. But when push comes to shove and when the shit hits the fans, I'm going back into normal US dollars or something that is based by normal US dollars. But that shit didn't happen. And people, the peg, the UST peg, remained at 1. It was more stable than any other stable coin. Here are the charts for you. This is the tether to USD charts. You've got all these. Let me show you some more of these. That is the DAI. Look what happened to DAI. Look at that. That's the DAI to USD chart. It looks like the only coins that kept their peg were UST and Magic Internet Money. And when that happened, Luna went to an all-time high. I don't know if you saw that, but after the correction, I'm going to quickly call this up for you guys so you can see it. After the correction, here, this is the correction. Luna goes up to $78 and hits an all-time high because UST kept its peg. And what the market said was, holy shit, if this token, if this algorithmic-based stablecoin can hold its peg in the biggest or second biggest panic of the year, better than any other stablecoins, we are confident to put our money into these algorithmic stablecoins, and the winner of that race is not going to be DAI or Magic Internet Money. The winner of that race is Terra. And what you can see happened immediately after that is that, here, there's another tweet here that says, stress test path, no positions underwater on abracadabra mimspell, peg holding super well. So algorithmic-based stablecoins actually did better than US dollar stablecoins, which shows a shift into a new financial narrative. People are moving out of US dollar backed stablecoins. They're saying US dollar backed stablecoins are a piece of shit, and the real stablecoins are actually the UST based stablecoins. And that took Anchor Protocol up to $3 billion in total value locked, all earning 20.69%. Imagine that. So now you can, in the middle of a dip, you can take your money, put it into Terra, and this is the narrative we've been talking to you guys about. We said to you guys it's going to be Lunar December. We said to you guys that Luna is going to explode in December, and here it is. It's exploding right in front of our very eyes. Yes, of course, it's come back slightly. It's come back slightly, but it's come back to the same place that it was a week ago, in the midst of a 30% correction. Right now, because of this, if you look at Terra or Luna, let me try and make this bigger for you guys. The total value locked on Luna is 13 billion, which is ahead of Solana, which is ahead of Avalanche, which is ahead of everyone else, and it only needs to catch up Ethereum and Binance. And I think it's going to catch up BNB chain. And then Terra Luna will be the second biggest chain in terms of total value locked. You're talking about the second biggest chain in terms of total value locked, which is all based on an algorithmic based backed stablecoin, not a US dollar backed stablecoin. Just take a minute to understand how far this ecosystem has come, where we can have an algorithmic stablecoin hold better than a US dollar based stablecoin. And so our thesis around Lunar December is still firmly intact. And yes, they've delayed the launch of the Astroport DEX, but the thesis is firmly intact. Our thesis around layer 2s and MATIC exploding and ZK rollups for Ethereum is still very much intact, despite what's happening on the market right now. Our next thesis was that in Jan or Feb, you would get a Cardano month, right? You'd get a Cardano month in Jan or Feb. And that thesis is still very much in play. So even though we have Cardano announcing that they now have 1 million delegators, which makes them by far the most decentralized blockchain. And SundaeSwap, which was supposed to launch their DEX, their testnet yesterday, came out with a tweet and said, look, we may have to rebrand to MondaySwap. In all seriousness, there was a bug. Now remember, they said they were going to go into testnet. So again, our thesis is very, 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 very much intact. So despite everything that's happening in this market, there's nothing that we can find that shares that we're going into bear market territory. Our thesis remains completely intact. Our Lunar December thesis remains intact. Our ZK rollups and Ethereum layer 2 scaling solution remains completely intact. Our Cardano narrative for January, February remains completely intact. What happened was just a short-term shakeout of leverage in a highly leveraged market, which means that we're now back in a much healthier market that's going to take time to get its momentum. It's going to take time to get its momentum, but when it does, it's going to continue to go up. And you know who suffered the most in this pullback? You know who suffered the most? You know who suffered the most? The same investors. It wasn't Fred. It wasn't Fred. Luke suffered more than Fred. Sheldon suffered more than Luke and Fred. Now, Sheldon got carried away. Sheldon, you'll be glad to know.
I'm not gonna lie. Like I took a smack on the portfolio. I took a lot of lessons again.
Yeah. You know who suffered the most?
Retail.
No. I'll show you who suffered the most. Okay. The people that Gary Gensler is looking after. So I don't know, if you're in America and you're an investor in the US and you entrusted Gary Gensler to look after you, well, you're suffering the most right now. I'll tell you why. Because Gary Gensler approved a Bitcoin futures ETF, and he wouldn't approve a Bitcoin ETF because he was protecting investors. So what did he do? He approved a Bitcoin futures ETF. Now, the problem with the Bitcoin futures ETF is that you have to keep trading out of the contract and buying into the next month contract. And every time you do that, the price on the next month contract is higher. And they call that contango, where you have to keep trading out and buying, renewing your futures contract with a next month futures contract, which is trading much higher. And so in trying to protect investors, which is what Gary Gensler does, he basically gave them one up the you-know-where. And he gave them they're on down 19.19%, whereas normal investors in Bitcoin are only down 8.8%. So the people that Gary Gensler was supposed to be protecting were the ones that got hit the hardest. Crazy. You know, Ryan Selkis on CoinDesk called Gary Gensler a fraud. And he said he was dishonest and he was a fraud. I'm going to try and get him onto the show so we can talk to him about exactly why he said that, but unbelievable. Anyway, let's stop talking about Gary. Let's talk about us. It's terrible when a girlfriend comes and says, let's talk about us. Usually means a half an hour conversation. Okay, so let's talk about us and our thesis. There's nothing here that shows me that we're going into a bear market. Nothing. Everything points to the fact that this was a healthy unleveraging in a bull market, and that the bull market is still firmly intact. No on-chain metrics, no technical metrics. The metrics all show that the bull market is very, very, very much intact right now as we stand. Obviously, things could change. They could change tomorrow. As I said to you, we give you the information. Some of you are looking for a fortune teller channel. You think we're fortune tellers. We're not fortune tellers. We are driving based on the information that we have right now. And if the Fed comes out and does something stupid tomorrow, we will change our thesis. If something happens tomorrow, we have to change our thesis. But for now, as it stands, the on-chain metrics tell us that it's a bull market. The technicals tell us that we're still very much in a bull market. The leverage tells us that we've shaken out half the leverage and that we may have one more smack to get the leverage out. You have to remember, as I mentioned to you before, people forget how long these recoveries take. You have to be patient because these recoveries are going to take time. We flushed out 650,000 traders with probably about 3.5 billion of leverage in the last month. It's going to take us time to get that momentum back in the market, and it's not going to happen immediately. But if you can see beyond this, this may be one of the best buying opportunities that we have got. And that's exactly what I'm doing right now. I'm starting to buying the things that I wanted to buy that I didn't have enough of, that are starting to look cheap. And I'll show you how I'm going through these. Let me show you how I'm going through these. So, for an example, I'm underweight Avalanche. I've said that to you guys. I said that to you guys before. I need to increase. I have a wish list. I know where I want to be. And I know that I'm underweight Avalanche. Now, Avalanche is trading at $81. So how do I look at this? I look at the chart and I say, when was the first time that Avalanche hit $81? And if you look at that, it was on the 13th of November. So we've basically just rewinded by 1 month. Not even. We've rewinded by 3 weeks. So for me, am I ready to start buying this? No. It's not looking cheap yet. Yes, it's rewinded by a month, and maybe I should start dipping my toes, but I'm not ready to be buying it. Let's look at some of the other big ones. So let's look at, for example, Solana. I look at Solana. Solana's at $180. How long ago was the first time that Solana saw $180? About there. So we're talking about a month and a half, a month and a week. This whole correction has taken us back a month and a week. Not cheap enough for me. I'm looking for bargains that take me back a long way. That's what I'm looking to buy. I'm looking to say, I missed buying these things 3 months ago. I'm going to start buying them now. Let's look at Trader Joe. This is one that I've been trying to get my hands onto. I did buy some at 180 over the weekend. Okay, when was the last time that Joe, here we go. Okay, so Joe has gone back to levels from September. A little bit more promising for me. A little bit more promising for me. I'd like to see it go a little bit further back, but at 180, I could start filling up my bags here. And that is how I'm looking to see what I'm going to buy. I'm going back and I'm saying, how much further back? And it kind of gives you an amazing perspective, because all we're crying about here is that the markets rewinded us by a month. That's it. And for me, for some of these things, it's still not cheap enough to be actually filling my bags, because I think there may be another leverage shakeout. And so I'm keeping cash reserves in case there is another leverage shakeout to reset the leverage completely. I put in 30% of my cash. I'm going to probably deploy another 20% of my cash pretty soon. I'll let you guys know on Twitter. But then I'm just going to wait, because I think that we may be going even further back than a month. I want to show you another example. Render. When it took a big smack, it's about 50% down from its all-time high. But if you look at it in the big scheme of things, we've gone back by a month, by 3 weeks. This whole correction has taken us back 3 weeks. That's it. It's all about perspective, people. Anyway, okay, so that's me for today. Just quickly, let's just do this quickly. Okay, Sats, you're a winner. Too late. I tried. Sats was the winner. Look at the Twitch guys. Look at them. Let's see. Unusable. I found one. I got one. Here we go. Cucumber. He's a winner. Cucumber's a winner. And RV15 Sun, you're also a winner. You guys all win 250 tokens of PathDAO. No, 250 tokens of PathDAO. Sorry, of what? PathDAO. Okay, there we go. Simon Law, who's also a monkey. PathDAO. And Jacob Mentz wins $250 worth of PathDAO. 250 tokens of PathDAO. Guys, we will see you guys again tomorrow. Until then, be careful out there. Let's look for the bargains. Follow me on Twitter at CryptoManRun. I will be posting a whole lot of fights with Kobe, and no more fighting with Kobe. We can't fight with salty people anymore. I'll see you guys again tomorrow. Until then, actually no, I'll see you guys again later. We've got an in the game later, right? In the game later. We have an in the game later. So stay tuned. It's coming up in about 4 hours. We have an in the game for you. Or 3 hours. We have an in the game for you. See you guys later. Until then, trade well, my friends. Too much.
What about that coin you were talking about, Fred?
Luke, is it alt season, bro?